Hello, welcome to Way to Wealth channel. Hope you're doing well. In previous videos, we've talked about why investing in the stock market is one of the ways to build wealth. In this video, we'll be going through how you can get started with investing with just £1. When you decide to start investing, you are bamboozled with many terminologies and acronyms that makes everything confusing. The purpose of this channel is to remove all jargons and help you understand finance in the simplest way possible. Before we get started, let's take a look at what is meant by compound interest. It is interest you earn on the original money you invest plus any accumulating interest. It is when money makes money, and the money that makes money makes money. Don't let that get over your head, so rewind if you need to. In the best way possible, Franklin teaches us about the importance of compounding. Just before he passed away in 1790, he funded a trust with about $5,000 for the cities of Boston and Philadelphia. He instructed that the money was to be invested and could only be paid out at two specific dates in the future. The payment would be 100 years and 200 years after the date of the gift. After 100 years, the money had compounded to the point that each city was able to withdraw $500,000. By 1990, the pots accumulated to around $5 million. The simplest way to calculate compound interest is to use a method called Rule of 72. This rule allows you to calculate how long it will take to double your money. All you have to do is divide the interest by 72. Let's say that you invest £5,000 in Amazon stock and you receive an average annual return of 10%. If you divide 72 by 10, you will get 7.2. This means it will take you 7.2 years to double the value of your investment to £10,000. If you like the sound of doubling your money and want to get started on your own investment journey, you need to understand which businesses to buy. When I started investing, I had over 70 companies in my portfolio. At the time, I thought I was diversifying, but in hindsight, it's because I had no clue of what I was doing. Investing means that you own a part of a business. When you own a business, surely you want to keep up with what that business is doing from time to time. Given my personal scenario of 70 companies, I want you to ask yourself, how easy would it be to keep up with 70 businesses, especially if you have a full-time job? Don't forget you still have to have a look at their financial status. Exchange traded fund, known as ETF, is considered to be one of the safest ways to start your stock market journey. It is an approach that has been recommended by legendary investors like Warren Buffett. There are different types of ETF, but for simplicity, we'll focus on stock ETFs. Stock ETFs is a basket of companies that track a single industry or multiple sectors. For example, a stock ETF might track renewable energy or Chinese companies. This approach is recommended simply because it provides diversity. ETFs will typically include a mixture of high-performing companies and new entrants with potential for growth. A popular stock ETF is the SPDR S&P 500, which tracks 500 of the largest publicly traded companies in the US. This is the largest ETF in the world. It's time for a random fact. Did you know that the most expensive share on the New York Stock Exchange is Berkshire Hathaway? It is currently priced at over $425,000. Berkshire Hathaway was founded by investment legend Warren Buffett. To begin investing in stocks, you will need to choose an investment platform. Investing has been simplified with applications such as Trading 212, Freetrade, and Robinhood. Before these applications, you would have had to pay a fee for each trade. Imagine paying £11 every time you buy or sell a share. The stock market is full of many ETFs, therefore it's important to still do your research. You wouldn't go to Tesco with a blindfold for your weekly grocery, so why would you buy a stock without knowing anything about it? You must understand what you're buying when you're investing in the stock market. ETFs are not like individual stocks. You must think about the entire picture. It's important that you investigate the sectors or industries of the companies in your chosen ETFs. One of the benefits of doing your own research is that you would have a better understanding of what's in your basket of ETFs. You will be able to pick the best ETF that suits your needs. During your research, you might find that you are more excited about some sectors and industries than others. You might also find that your long-term goals might decide which type of ETF you invest in. For example, if your goal is to earn regular income from your investment, you might want the iShares UK ETF, which contains 50 stocks that pay high dividends. Once you've picked your ETF, it's time to decide on a strategy for investment. You could consider using a technique called dollar cost averaging. Dollar cost averaging is an investment strategy which spreads the total amount you plan to invest across a period of time. The benefit of using this strategy is that you will reduce the impact of volatility on the overall purchase. With this strategy, your purchases of the stock will be regular whilst you avoid trying to predict the price. We talked about compound interest earlier. When you invest in an ETF, it's important to let your money grow by reinvesting the money that you make from your investment. Think about what we said earlier on about Benjamin Franklin. To start investing today, click the link in the description below and register for a Trading 212 account. You will receive a free stock once you register. Although we're focused on getting you started on your first investment in the stock market, it's important to try and get your finances in shape first. Make sure you have some emergency funds when investing. This helps you to avoid withdrawing your investment when the market is in a downturn or when you need extra cash. Thank you for watching this video. I hope you now feel comfortable with making your first investment. Comment, like, share and subscribe to this channel for more videos about the stock market. Until next time, stay curious and be happy.